Hey everyone, we got a fun one. Let's talk about what a Form 1099-R is. So here we are, late January 2023. We are in the starting to get into the thick of tax return season for 2022 tax year, and a lot of you may be getting a Form 1099-R, wondering what it is. There's a lot going on in it, so you may be curious what are these different boxes and numbers and checks or lack of checks mean. So we'll talk about that briefly. At a super high level, this is something that anyone in retirement is probably very familiar with, or will be if they're not already. And what it is a 1099 in general is a form that payers, when you receive money, payers send to you and the IRS to document what they sent. And there's different kinds of 1099s. For example, 1099-int, INT, is what a bank will send you if you receive more than $10 of interest from them. They'll send you a 1099-int. You get it. The IRS gets a copy. If you get dividends from stock, for example, you may get a 1099/div, DIV. If you get a payment from the government, you'll get a 1099-G, G as in government, such as a state tax refund. And then there's 1099-R, where R stands for retirement. And there's lots of different types of accounts or payers that would potentially send you a 1099-R. For example, if you have a pension and you're receiving that pension, you'll get a 1099-R for that. If you have an annuity from an insurance company where you're receiving some sort of payments or distributions, you'll get a 1099 for that. Social Security sends out 1099s. The 1099-R is non-Social Security, but again, it's pensions, annuities, or other types of retirement accounts like employer plans, such as a 401k, 403b, the Federal Thrift Savings Plan. Anytime money leaves those, it'll generate a 1099 that you get and the IRS gets. Also, regular IRAs or Roth IRAs, anytime money leaves those, you'll get a 1099 at the end of the year, technically soon after the end of the year, as will the IRS. So any 1099 you get, especially 1099R, well, any, not just especially 1099Rs, but 1099s need to get reported on your tax return. Again, the IRS gets a copy of these. They have a computer matching system that will look to see. They know every 1099 you get, they're going to have a computer system that looks to see, okay, they're expecting you to report ABCD based on these multiple 1099s they got copies of. You better show those on your tax return. Now, that doesn't mean it's necessarily taxable, but you have to nonetheless report at least the gross distribution. So a common example is you take a distribution from a traditional IRA, whether it's an outright distribution to take and use the money to pay for life, or you do a conversion, a Roth conversion, by transferring money from your traditional IRA to your Roth IRA. That money leaving the IRA will have a 1099-R generated for it. So let's quickly take a look at one. Sounds like fun, right? So here we go. So here's a real living, breathing 2022 tax year 1099-R. This is for someone that has a traditional IRA that took a total of $17,000 of distributions for the IRA. Now, each 1099-R may look and feel slightly different in this format, but they'll all have the same numbering. You'll see there's 19 boxes or 19 numbered lines down at the bottom. 1099-Rs will have the same 19 with the same labels. So just starting at the top quickly, it shows the tax year. That's important. If you're doing your 2022 tax return, make sure it says 2022 1099-R. There'll also be the recipient's TIN or taxpayer ID number. That's going to be the Social Security number, and it'll have the recipient's name. It'll also have the payer's information. So the payer, if this is an IRA, for example, it would be this particular one is from TD Ameritrade. It's going to have their tax ID number, also their phone number, their name, their address, etc. Next, let's go down to the bottom. So box one or line one, this is the gross distribution. This is the total amount of dollars that left this person's IRA in 2022. Now, this doesn't necessarily tell you much. For example, I know that this particular person, of the 17,000, 15,000 of it was a regular straight up distribution to take and use the money. 2,000 of it was a qualified charitable distribution or QCD, which is where the money is sent directly from the IRA to a qualified charity. That $2,000 is not taxable because it's going to a charitable organization. Only $15,000 of this total 17 gross distribution is taxable. But the IRA custodian doesn't know that. It's ultimately on you, the taxpayer, to square that away with the IRS. So let's keep reading. Box 2, or 2A, I should say, taxable amount. Notice it says $17,000. It doesn't say 15. Remember, 2,000 of this was qualified charitable distribution and not taxable. It's not the custodians. The onus isn't on them to bifurcate and report that. they're going to report all 17 as taxable. Now, technically, this just means it's potentially taxable. Look now at box 2B or row 2B, taxable amount not determined. It's checked, which means yes, which means the taxable amount is not determined. So this is TD Ameritrade saying, we don't know how much of this is taxable. That's on you, taxpayer, to figure out and square away with the IRS. So this is where you need to know, in the example, if you did do a qualified charitable distribution, you need to keep record of it. You need to accurately put it in your tax return or tell your tax return preparer so he or she can properly account that, in this case, $2,000 of the $17,000 distribution is not actually taxable, even though the 1099-R sort of makes it look like it is. Let's keep going. So a couple other things to point out. Line 4, box 4, federal income tax withheld. To the extent you did have federal taxes directly withheld, that would show up here. In this case, this client did not, so no tax withheld. Box 7 or line 7, distribution code. This is a big one. There's a whole host of codes. And if you look at the IRS instructions to Form 1099-R, which you can find online, and there's a link in the notes to this video, you can see the various different letters and numbers. Now, this is sort of like, this is like taking someone's blood and looking at the blood results. You can tell a lot by looking into it. You can't tell on the surface, but you dig into it and you can get a lot of information. So in this particular example, code 7, that means just normal distribution. Person is over 59 and a half, therefore not subject to 10% penalty. They took money out, normal distribution. Now, again, the qualified charitable distribution does not get accounted for anywhere here. As far as the IRA custodian knows, this is all just 17,000 of normal contribution, and this box 7 code, this line 7 code of 7 says the same. So again, it's on the taxpayer to know 2,000 of this was a qualified charitable distribution. Other types of codes will be like if you did a rollover from a employer 401k plan into an IRA, this code in box 7 should be G, G as in George, qualified rollover. There's also like code 1, code 2. 1 denotes it's an early withdrawal with no known penalty. 1 denotes it's early withdrawal with an exception to the penalty, and a whole host. I think there's a few dozen different possible codes that there may be. This other one by box 7, row 7 is IRA/SEP/simple, basically asking, is this an IRA account? Yes or no. If it is, check the box. If it's not, for example, if it's a 401k or a pension plan, you do not check this box. Why does this matter? A little beyond the scope of this video, but if you look in the tax return, there'll be different rows for, did you take a distribution from an IRA or did you take a distribution from a pension? There's just 2 separate rows. This box here on 1099-R, this little flag will funnel where this distribution goes into which line of the tax return. A couple other things to point out here is line 14, box 14, state tax withheld. If you did have state income tax withheld, that would show up there. Line 15, box 15 would show the state for which you had state income tax withheld. All right, so that's it. That's all I want to show. Again, there's more to the 1099-R, as you can see, than the few things I hit on, but the few bullets I mentioned are the main ones that you need to pay attention to when you're doing your tax return and trying to figure out what's taxable, what's not. It's not necessarily, don't take it on face value all the time. That's it. Hope you found this helpful. Take care.